I'm Richard Bellis here with columnist Bob Robb, and I guess the fact we're both here means neither of us played the day trading game with GameStop. Bob, you're a free market guy, but it sounds like you don't think that what goes on with day trading and short selling adheres to free market principles.
Or more precisely, that the market needs to be protected from manipulative activity. And I do think the GameStop mania illustrates a couple of areas of manipulation for which, is surprising as it is to hear me say it, needs some additional regulation. And the first is short sellers. Most free market advocates believe that they play a useful role in price discovery. I've never been persuaded of that, and I think this episode shows the destructive force that they can have. They're not investors. They're betting on the direction of a stock. And then with skin in the game, because they make money if the stock goes down, they conduct campaigns in order to try to drive the stock down, which in my judgment is manipulative. It's not price discovery, and it's unfair to those who actually own the stock. So the fact that they lost billions as the day traders drove the price astronomically doesn't bother me a bit.
Right. So maybe since it's not, do you think there is appetite, now that we've seen what happens with a GameStop, for someone to propose changes in, beyond a newspaper columnist, to propose changes in how these markets are handled?
Short selling is illegal in parts of Europe, as I understand it. And there has been calls to suspend short selling on occasion in the United States. And certainly the mania has generated legislative interest, both right and left, in seeing what lessons should be learned from this. So I'm doubtful that it will result in a ban, which I think should take place, but it at least opens up the discussion. The day traders with coordinated buying programs, coordinated through social media, is a trickier thing to regulate, although it's also a form of market manipulation. So what I propose is that we eliminate buying stock on the margin and buying options rather than stock, which increases the leverage, which increases the amplitude of the manipulation by coordinated purchasing through social media. I think that would reduce it to the point that it would be okay to permit it to continue going on without regulating it directly, which would be tricky and run into some First Amendment problems.
Right, and I guess we could go the other way, and instead of having it being regulated by the Securities and Exchange Commission, put it under the Department of Gaming. As you say, it's essentially gambling, right?
Right.
Yeah.